Alright, so here are my trading profits for the week ending November 27th. So gross profits for the week 504 USD, net profits for the week 418 USD. So this is after commissions, even Questrade's crazy commissions of $85 for the week. So I'm going to go over my trades and explain them a little bit. So first of all, I had an Nvidia put spread at 510.505 where I collected $1. So I opened this trade actually Friday, November 20th. So last week when Nvidia was trading at around 528. So I sold a 510.505 put spread. So I went about 15 to 20 points lower. So basically for me to win on this trade, I just need Nvidia to stay above 510 come Friday, November 27th. I collected $1 for that, risking $4. And as you can see, Nvidia actually dropped all the way down to 521. And then on Tuesday, November 24th, it dropped to 517. I think at some point it was trading at 516. I think we could see it over here, 516.87. So it came 6 points away. So it got pretty close. But then the next day it just jumped back up. And I think I was able to close it. If I go back to my trades, I was able to close it for 25 cents. If I had held on to it till Friday, it would have expired worthless because Nvidia closed at 530.45. So that gave me a net profit of $62. Next trade was a Tesla put spread that I also opened Friday, November 20th. I opened it at 455. So my short strike is 460. So basically I need Tesla to stay above 460 for me to win on this trade. And I collected 95 cents. So if we go to the chart, so Friday, November 20th, Tesla was trading at around 490. So I opened a put spread at 460, basically 30 points lower. Monday, Tesla opened at around 520. So I was actually able to close the trade right away on Monday. I didn't have to wait till Friday. Obviously, if I waited till Friday, it would have expired worthless. I would have kept the full 95 cents. But on Monday, just the next day, I was able to close it for 12 cents. So it didn't make sense to hold on to the trade for a few pennies, even though it had a very good chance of expiring worthless. So that's a $70 profit. Now this BABA put spread, this was a rolled trade. So this was initially, I think, 260 or 250, I don't remember. And I just rolled it to January actually. So this was a put spread that initially I think had an expiry of November 20th, an expiration of November 20th. I ended up rolling it because it came close. I was able to roll it down. So I went from 250 to 230 for I think a 5 cent credit. Yeah. So initially the put spread was 95 cents. And then when I rolled it for 5 cents and I rolled it before the 250 strike got breached. So that's why I was able to roll it for 5 cents, but also roll it down. So I went from 250, 245 put spread to 230, 225, but I had to go to January. So I had to go far to be able to do this. So I made the trade much safer. I gave myself more time. But because BABA went up and a little bit of time passed by, I was able to close it for 43 cents. Didn't feel like waiting till January 15, which is almost more than 50 days away to collect the difference of 43 cents. So I opened it, collected $1, closed it for 43 cents. Not bad. After commissions, made a profit of $44. I played Autodesk for earnings, did a put spread at 240, 235, collected $1, and the next day I was able to close it for 40 cents. I actually could have closed it for much better if I just waited a bit, but regardless, I had a good till cancel order, and it got filled at 40 cents. So that's a $47 profit overnight. So I think Autodesk was trading at around 250 or 260. Then after earnings, it went a little bit higher, so I was able to close the put spread for less than what I collected. Now, Best Buy, this is an earnings trade as well. This one's interesting because I think Best Buy was trading at around 123. I sold a naked put. So this is not a put spread. This is a naked put. I sold the 115 put, collected $1. Let's go look at the chart. You can see right now, Best Buy closed at 112. So it actually closed below my put. Now, where's this Best Buy here? So, okay, there we go. So, obviously, before earnings, it's obvious that Best Buy was trading over here. And then after earnings, look at it drop. So, it dropped below my strike of 115. I held on to it. I didn't do anything. Then the next day, it went above 115. It went to 116. So, I ended up closing it when it was trading at this point. So, if I go back to my trades here, I collected $1. But then I closed it for 44 cents when Best Buy went up. If I had held on to it till expiry, thinking that it would expire worthless, this was a case where it did not expire worthless. It actually went to 112. Now, if I had held on to it till expiry, I had a few choices. I could close it for a loss, so I'd pay about $2.40. So I would lose about $1.40 on this trade. Or I could roll the trade. Ideally, with naked puts, the advantage of naked puts is that you can easily roll them. So I could roll it to next week for an additional credit, and basically wait for Best Buy to come back up if my assumption is Best Buy will come back up. So basically, to roll is that I would buy this week's expiry, this week's option. So I'd buy back the November 27th, and then I would sell the same strike next week for a credit. The difference will be a credit, because if I buy this week's for $2.40, for sure next week is worth more because it has an extra week. That's if I'm selling the same strike. And sometimes I can even go a lower strike, but then I'll have to do it for a credit, I'll have to go further out in time. So it depends what I want to do. I didn't have to deal with that because I ended up closing the trade. I got lucky. I think I got lucky for having the opportunity to close the trade early. So $44 profit there. Peloton was a naked put as well. This wasn't a good one because it didn't have high IV, but just because I played it last week and it was a winner for me. Over here, I did a 93 put on Peloton last week. It was a winner, let it expire worthless. So I felt like playing it again. This time I had to go to 103 strike. I collected $1.01 and I ended up closing it for 38 cents. Now this one would have expired worthless if I held on to it till expiry. So if you look at the chart, so I opened the trade when Peloton was trading at around 106. So I opened it on Tuesday and then it dropped a little bit. Got worried for a second there because my strike is 103. I actually could have gotten a better entry, could have collected more than $1. Probably could have collected easily $1.75. But it's hard to time the entries, of course. But I think the next day I was able to close it for 38 cents. So made a net profit of $51. Now Chegg was this one's a little bit disappointing because I could have made more out of it, but I always close a bit too early anyways. So this was a put spread for earnings that didn't go well, got completely breached. From the put spread I collected $1, and then when it got breached I sold a call spread, collected 60 cents, and then I closed the call spread for 5 cents. So that's why I've got -5 if you're looking up here. And then I decided to turn the put spread into a naked put. So I sold the long put, which was the 70 strike. I got rid of it, I sold it, and I collected $3 from selling the long put. But by doing that, now I've got a naked put. So it's a little bit more dangerous, but it's easier to manage because I can continuously roll for a credit. So once I sold the long put, collected $3, I rolled the short put of 75 because initially it was a November 20th expiry. So I rolled it to December 18 expiry, collected $1.10. But then if we look at the chart, Chegg made a crazy run up this week. And if I had just waited Friday, I would have gotten a better exit. I ended up exiting this naked put for $4.70. But I could have easily exited this trade today for $3.50. So would have made an extra $100. So I ended up making a profit on this trade of $98 net profit. So that gives me a total for the week of $418. Now open trades that I have for next week, I've got CRM at 230, 225. It's got earnings next week. I've got FedEx 275, 270, collected $1, December 11. So CRM has a December 4th expiry. So next week FedEx is December 11. I've got the Deere company. This one was so this one and this one were earnings, but I wasn't able to close them after earnings, so I'm still holding on to them. Deere has a December 11th expiry, and the VMW has a December 18 expiry, collected $1 each. But VMW is at 142 right now, so it's very close to my short strike, but I've got time. Deere I think is at around 260, but I'm not able to close it yet for a decent profit, so I'm still holding on to it. And finally I've got Nvidia and BABA, but these were rolled trades from a while ago, and as you can see I've rolled them for a debit, so I ended up paying to roll. And that's why if I let them expire worthless, I don't make anything, but I don't lose anything either. I was just trying to save trades that were going to go bad. I'm just trying to save them and break even instead of losing money on them. And to add to this week, I almost sold a put spread on Tesla at around 620 strike this morning for $1. Chickened out. Would have been a winner easily. And also at an 800 strike for next week, so December 4th expiry, for about $2. I actually sent the order for next week, but it didn't get filled. But Tesla dropped after its run up in the morning, so the option prices dropped as well, so I wasn't able to get that fill. Alright, so that's it for the week. If you have any questions, leave in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.